Crypto, the whispered promise of a financial paradigm shift, a digital frontier where fortunes are forged in the blink of an eye. A revolution championed by some, a dangerous gamble decried by others. Yet, as we navigate this volatile landscape, from tulip bulbs to railway stocks, the human psyche has long been susceptible to the allure of rapid wealth creation. Hi, welcome to Lux 24/7, inspiring the luxury of success. Join us as we expound on the digital gold rush, crypto delusion versus reality. In this digital age, cryptocurrency has taken center stage, painting a vivid picture of instant riches and decentralized power. But beneath the vibrant surface, a crucial question persists. Are we witnessing a genuine evolution of finance, or simply a technologically advanced speculative fad? Let us dive into this phenomenon. The all-consuming dream of effortless fortune. For what feels like an eternity in the fast-paced digital age, cryptocurrency has been meticulously crafted into the narrative of the ultimate shortcut to wealth. Social media platforms have become digital shrines to overnight success, overflowing with carefully curated testimonials and seemingly irrefutable proof of astronomical gains. Soaring price charts and screenshots flaunt ludicrously inflated portfolio values, and an endless stream of anecdotal evidence suggests that ordinary individuals are effortlessly transforming modest sums into life-altering fortunes with a few strategic clicks. The core message is clear and compelling. Buy in early, embrace unwavering conviction, HODL. Weather any temporary dips with unwavering diamond hands, and passively observe as your digital assets embark on an inevitable ascent to the moon. This potent and highly addictive cocktail of perceived simplicity, minimal effort, and the promise of unimaginable financial liberation has cultivated a powerful and pervasive belief that crypto offers a guaranteed, frictionless, and remarkable pathway to unprecedented riches. Yet, the often glamorous surface of these carefully constructed success stories conceals a far more sobering and frequently ignored truth. For every highly publicized instance of someone striking it rich in the crypto lottery, there exists a silent and far larger majority who has quietly endured devastating financial losses, their dreams of easy wealth dissolving into the harsh reality of depleted savings and shattered hopes. The inherent volatility of the cryptocurrency market transcends mere statistical fluctuations. It is a fundamental and often merciless characteristic, capable of inflicting profound financial damage with breathtaking speed. Prices can surge to dizzying speculative heights, only to plummet without warning, based on a complex interplay of market sentiment, unforeseen regulatory announcements, and the often opaque actions of large holders. The seductive dream of instant and effortless wealth can, with brutal and disheartening speed, devolve into the stark and enduring nightmare of significant financial ruin and lasting regret. The reality. The opaque ecosystem. Manipulation, regulation, and the spectre of loss. The alluring narrative of decentralization and democratized finance often obscures the uncomfortable truth that the cryptocurrency market, in its current largely unregulated state, is also a fertile breeding ground for sophisticated and often difficult to detect forms of manipulation. Elaborately orchestrated pump-and-dump schemes, where coordinated efforts artificially inflate the price of obscure tokens before the organizers and early participants liquidate their holdings at inflated prices, leaving a trail of financially devastated latecomers, are a disturbingly prevalent and damaging practice. Insider trading, the unethical exploitation of privileged, non-public information for personal financial gain, casts a long and insidious shadow over the market, eroding trust and creating an uneven playing field. Furthermore, the significant concentration of vast quantities of certain cryptocurrencies in the hands of a relatively small number of large whale investors introduces an inherent instability, as their large volume trades can trigger dramatic and often unpredictable price swings, disproportionately impacting smaller, less capitalized traders. Compounding these inherent risks is the persistent and often frustratingly slow progress in establishing comprehensive and consistent regulatory frameworks across the globe. Governments and financial regulatory bodies worldwide are engaged in an ongoing and often complex process of grappling with the novel challenges posed by cryptocurrencies. They are struggling to balance fostering innovation with the critical need for consumer protection and financial stability. This patchwork of often conflicting or underdeveloped regulations creates significant loopholes and opportunities for illicit activities to flourish with relative impunity. Scams of increasing sophistication, ranging from meticulously crafted Ponzi schemes masquerading as cutting-edge decentralized finance, DeFi, protocols, to the sudden and devastating rug pulls, where project developers vanish with investors' funds. The ever-present and evolving threat of highly sophisticated hacking attacks, targeting cryptocurrency exchanges and individual digital wallets, have collectively resulted in the staggering loss of billions of dollars for countless individuals. These events have starkly illuminated the darker and far more precarious underbelly of this much-hyped financial frontier. The delusion, also known as the revolutionary promise, crypto as the undoing of traditional finance. A particularly captivating and frequently articulated vision within the fervent community of cryptocurrency proponents is the seemingly unwavering belief that Bitcoin and a burgeoning ecosystem of alternative cryptocurrencies are on an inexorable path to fundamentally disrupt and ultimately supplant the established dominance of traditional banking institutions and government-issued fiat currencies. The compelling allure of a truly decentralized and entirely borderless global financial system, operating free from the perceived inefficiencies, bureaucratic hurdles, and centralized control of traditional intermediaries, holds an undeniably powerful and transformative appeal for a significant segment of the population. The core tenet of this revolutionary vision centers on the empowerment of individuals to act as their own sovereign financial entities, directly possessing and managing their digital assets with complete autonomy, transacting freely across borders without the need for traditional banking infrastructure, and ultimately ushering in an era of unprecedented financial freedom. However, a more pragmatic and nuanced perspective reveals a far more complex and less immediately revolutionary reality. Governments and powerful central banks, the cornerstones of modern financial systems, are unlikely to simply cede their fundamental authority over monetary policy and financial stability. While acknowledging the disruptive potential of blockchain technology, central banks around the world are actively engaged in intensive research and development efforts focused on creating and implementing their own digital currencies, CBDCs. This strategic move aims to allow them to adapt to the evolving digital landscape while simultaneously retaining their crucial regulatory oversight and control over national currencies. Furthermore, traditional financial institutions, far from facing imminent obsolescence, are increasingly recognizing the strategic importance of blockchain technology and are actively exploring and implementing various ways to integrate cryptocurrencies and related decentralized technologies into their existing service offerings. Financial institutions are seeking to capitalize on the innovation rather than be entirely replaced by it. The likely trajectory of the financial future points not towards a swift and complete overthrow of the old guard, but rather towards a gradual process of integration, adaptation, and coexistence between traditional and decentralized financial systems. The reality, beyond the speculative frenzy. Unearthing crypto's genuine utility and long-term potential. While the cryptocurrency market often appears to be dominated by the volatile currents of speculative trading and the relentless pursuit of short-term gains, it is absolutely essential to recognize and appreciate the genuinely groundbreaking and increasingly impactful real-world utility that the underlying blockchain technologies and the diverse ecosystem of applications being built upon it are beginning to deliver. These practical applications extend far beyond the realm of mere financial speculation. Sophisticated smart contracts, self-executing digital agreements immutably recorded on the blockchain, are streamlining intricate processes, enhancing transparency and automating complex transactions across a growing range of industries. Decentralized finance, DeFi platforms are evolving rapidly, offering novel and potentially more accessible financial services such as lending, borrowing, and trading, with increasing levels of security, user-friendliness, and regulatory scrutiny. Non-fungible tokens, NFTs, having moved beyond their initial association with digital art and collectibles, are finding innovative and practical applications in verifying digital ownership, managing intellectual property rights, enhancing supply chain transparency and traceability, and even enabling fractional ownership of tangible real-world assets. Additionally, certain well-designed and efficient cryptocurrency networks are demonstrating their significant potential to facilitate faster, cheaper, and more secure cross-border payments. These efforts are particularly in regions with less developed or more expensive traditional financial infrastructure. Therefore, while the allure of overnight riches and the fear of missing out will likely continue to fuel speculative zeal within the cryptocurrency markets, it is crucial to maintain a balanced perspective and recognize the genuine and growing utility of the underlying blockchain technology. Navigating this complex and rapidly evolving landscape successfully requires a commitment to continuous education, the adoption of prudent risk management strategies, and a discerning ability to separate the often overstated hype from the tangible and long-term potential of this transformative technology. We urge the willing to invest the time and effort necessary to acquire a genuine and comprehensive understanding of its inherent risks, its underlying technologies, its diverse applications, and its long-term potential before making the decision to engage with its often turbulent and unpredictable ecosystem. The intoxicating and often misleading allure of overnight fortunes will inevitably ebb and flow with market cycles. But true and lasting empowerment, both financial and technological, will stem from a commitment to continuous learning, the cultivation of critical thinking skills, and a willingness to approach innovation with a blend of cautious optimism and responsible engagement. So, what's the truth about crypto? It's not a scam, but it's also not a magic money machine. It's not the end of traditional finance, but it is reshaping it. The question isn't whether crypto is real or fake, it's whether you truly understand the risks before diving in. Fads and hype fades, but reality, that's what determines who wins and who loses in the long run. We hope to have succeeded in giving you an informative perspective on the current state of the cryptoverse. And with all that said, this concludes our video. Let us hear your thoughts and opinions in the comments section. Make sure to like, share, subscribe, and hit the notification bell if you haven't already. Check out our other videos if you enjoy content like this. Until next time, this is Lux 24/7.